I am joined by James B. Steele, a Pulitzer Prize-winning journalist covering federal taxes, as well as author of numerous books, to talk a little bit about income inequality, taxes, how the rich evade them. But before we get into the conversation, I do first want to say thank you for joining the program.
I'm just glad to be with you today, Brandon.
Yeah, and we're glad to have you as well. I do want to start by kind of setting the table for what we're going to be talking about by going back to where I believe a lot of the ideas of these major cuts for the rich came from, that being Reaganomics, obviously. Could you maybe explain what the Economic Recovery Tax Act, that he passed, included, who it benefited the most, and like some of the results we saw from it?
I'd be happy to do that because it's kind of a watershed act, really, over the last half century that shows exactly what's happened to the tax code. I mean, there have been a couple exceptions here and there where taxes gone up, but that one set the table. I mean, that got everything in motion that has eventually led to a tax code that we have now, which greatly benefits the rich and the well-off at the expense of the average person, as exemplified most recently by the big Trump tax cut. But if you come back with me to 1981, at that time, the top income tax rate was 70%. But that was only on less than 2% of taxpayers. In other words, the very, very richest taxpayers. And it only applied to what I would call the most significant part of their portfolio, their stock dividends, interest on savings accounts, things of that sort. It did not apply to their earnings or anything like that. Did the average person even know about that rate? No, because they didn't pay it. They weren't anywhere near it. It never affected them. They were never in any danger of paying that. But the Reaganites came in the 81, and the whole idea was to cut taxes. So they put that through. They cut that tax rate from 70 to 50% on what's known as unearned income, these dividends and interest. Now, uh, it only affected a tiny number of people, but as somebody else once said in Congress, it was real money. If the 70% tax rate had been in effect recently, when the Biden infrastructure bill was passed, it would have generated enough money to pay for all the roads and bridges and all the waterworks that were called for in that infiltration bill. Yeah, I'm sorry, infrastructure bill.
Mhm.
So it's real money. I mean, when you cut taxes like that, it's actually going to put a hole in the budget and the deficit. So, but that's what got things rolling. It was sold on the basis that everybody would get a tax cut. And that's an important thing I want to emphasize. Most of the tax cuts that conservatives and Republicans have put through, there's usually a little something for the little guy. So he gets a few bucks here and there. So you think, well, that was great. My taxes got cut. But overall, the beneficiaries are always those people at the top in most of those tax bills, because where the real money is to be saved. So that got things started, and we've been basically on a trajectory, one way or another, personal taxes, state taxes, corporate taxes ever since. And as a result of that, the rich have gotten richer, and the average person is stayed pretty much where they were.
And I'm glad actually that's the point you ended on, because the next question I wanted to ask was kind of going into the direct effect of these tax cuts on income inequality. Could you maybe speak to like the growth of incomes across the spectrum before these tax cuts we saw in 1980, and then how it changed after and since then to now?
This is a very good question and a very good point you raised because, I did some calculations on just that point. If you go back to the 1950s and 60s, the top sector of America, the top 1%, accounted for about 37% of the income in the country at that time. By the time the Reagan tax cuts went through and the subsequent ones in many years after that, down to and including the Trump tax cut, now we're finding that top 1% accounts for about the high 50s, close to 60% of income earned. So the reason for this in part is that each year rich people have more money because they've saved money on taxes. That's more money to invest. It's more money to buy your fourth or fifth house. It's more money to buy your mega yacht if that's what you want, or to blast off into space like Elon Musk does and Jeff Bezos do. So when you cut taxes from the simple fact of the matter is it leaves them more money. They already have enough money to take care of their basic needs. And that's why taxes are important. Any tax cut that I've ever advocated was not going to change the lifestyle of any rich person, but it was going to put more money into the public sphere. And every one of these people who's rich is in one way or another benefited from public actions. It might be a simple thing like roads. It might be a simple thing like waterworks. It might be a simple thing like the internet. But all of those investments that we as a society make benefit those people at the top as much as anybody.
I think that's a really good point to make, to kind of put into perspective that the money is going towards things that they still themselves will benefit on, and has enabled them to earn the way that they do. Moving forward just a little bit from there, when Bill Clinton came into office, I know that he modestly raised the top rate from, I think, 31% to 39%, and a lot of detractors from that said that this would kill jobs, kill
Right,
businesses, similar to the points that we still hear made today about it.
right.
Did any of this actually happen after Clinton's tax policy was enacted?
It did not happen, and in fact, the opposite happened. The economy took off, and Clinton has the distinction of being the only president in the last half century to actually create budget surpluses. In opposed, because all under Reagan, there was budget deficit after budget deficit. Same with George Bush. The same further down the line with certainly Donald Trump. Clinton actually, by raising taxes, put more money in the public treasury, which meant you have less of a deficit. It's interesting about this point because it's not a secret about this. You look at Congressional Research Service reports on this, and they show very, very clearly that the tax cuts, the principal benefit of it is that it gives people at the top more money. It has little or nothing to do with creating jobs. It has little or nothing to do with even stimulating the economy. It just puts more money into the pockets of people whose pockets are already full of money.
Mhm.
So it's such a simple fact, but it's what's fascinating to me about the Republicans and the conservatives, and there's some Democrats in that category too, constantly make the point that tax cuts are stimulating for the economy, but they don't. Uh, what stimulates the economy is investing in the economy.
Mhm.
Things like the Infrastructure Act that Biden put through 3 years ago. More roads, more bridges, more internet infrastructure, a whole range of things. That's investing money for everybody, not just for some guy who already has $1 billion in his pocket.
Yeah, and it has the downstream effect of creating jobs and things that also themselves will benefit the economy. And to your point, when you put more money in the pockets of these top earners, they tend to hoard it or just spend it on things that will enrich themselves more, like stock buybacks or dividends, like these kinds of things.
Exactly,
Yeah.
exactly.
So, a more recent example of the tax cuts, like we saw in the Reagan era that you spoke to as well, were the Trump tax cuts in 2017 that he passed. And I do have frequent flyers on my channel who try and push that these weren't disproportionately skewed to the wealthy. They benefited everyone equally. So I wanted to be sure to ask you, could you explain how they either were or weren't skewed towards the rich, and then the economic effects of these as well?
Well, the Trump tax cuts were frankly just outrageous. And I've often wondered in my mind if the actual impact of that proposed tax cut, if newspapers around the country or daily websites around the country had published a chart showing who would benefit, if that thing would have passed. Because the numbers are shocking. There's a committee, let me go back a second on this to tell you where this comes from.
Mhm.
I do all my own numbers crunching, but I rely obviously on some government statistics on this to do it. But for 100 years, there's been a committee in Congress called the Joint Committee on Taxation, and it is regarded as a nonpartisan committee that both Democrats and Republicans use to estimate taxes and the impact if you're going to cut taxes or raise taxes.
Mhm.
What will it be on the society? The Joint Committee at the time of the Trump tax cut put out a table that showed who would benefit from the tax cut, and almost every income group got a tax cut. But when you looked at the actual numbers, people earning 1 million or more, and that would be anybody from 1 million up to 100 million. I mean, it's the whole category.
Mhm.
People in that category were going to receive a tax cut the equivalent of $64,000 a year over the life of that bill, which went for many years. If you were in the heart of the middle class, let's say around 50,000, 60,000, what were you going to get? It said $800 a year. So you got a tax cut. The people who say everybody got the same, they're very often talking about percentages. And yeah, maybe that guy at 50,000 got an 8% tax cut, but it's not much money.
Mhm.
If you're at the top and you get an 8% tax cut, it's a lot of money. And that's what's happened over and over again. I mean, all the tax cutters through the years have disguised these cuts that way. They say everybody's going to get a little something here. Of course, not even in the Trump bill, not everybody got something. But that's the way they cover their tracks to reward these things to the folks who contribute to their campaign and who are their main constituency. So I don't know who these people are pushing back on you, but it's just not the case because it's right there in black and white with the Joint Committee. It's not a secret, as most of these things aren't. It's there for everybody to see if you want to look at the numbers.
And would you say that like another way that they kind of sneak like the disproportionate effects of these tax cuts in would be like things like, for instance, even the corporate tax rate, where I mean, obviously, like working class people aren't going to be owning corporations, like pass through income tax cuts, qualified dividends, these kinds of things also disproportionately skew the numbers too, I'm sure.
I'm glad you brought up the corporate tax rate because you go back a little in time before you and I were certainly interested in this issue, but if you go back a little in time, let's just say the late 50s, even early 60s,
Mhm.
think of the total pie, the total income tax pie. Corporations pay some of it, individuals pay another part. That's the pie.
Mhm.
Back at that time, corporations paid 39% of the total amount of income taxes. You know what they pay today? It's less than 10%,
Mhm.
and it's probably around 8% now. So, and they'll probably even pay less when the full numbers are totally in from the Trump tax cuts of a few years ago. IRS is sometimes behind on the way they calculate some of that stuff. But so the burden is shifted entirely to individuals uh, paying the income taxes. And corporations have not only is the rate lower. I mean, Trump lowered the rate substantially in the 2017 bill, but all kinds of other things have been plugged into the tax code to help corporations. Very, very complicated ones. The corporations thrive in the whole milieu of Washington because, look, I mean, the tax code itself, it is complicated. There's no doubt about that. Uh, and that complication leads to a lot of bad things happening in the tax code because nobody's watching when certain kinds of things get plugged in. It doesn't get great coverage, and the average person doesn't get the benefit of very often good news coverage to explain who's going to get these things and who's going to benefit from them. So I think it's one of the really disgraces of our country, the way we have reduced corporate taxes, which have only let those companies pay higher dividends to shareholders that are already rich, or let their stock get pumped up in value, which further enriches them.
And speaking about corporations, I know in the article of yours that I was reading over, you speak how in, I think it was 2003, that it was proposed that multinational corporations that make profits outside of the US, those taxes were lowered to also, again, I think 5%. Feel free to correct me if I was wrong. Could you speak to the effect that this had on US employment and also things as, like you mentioned, stock buybacks, executive pay, and such?
Well, I'm glad you brought up that one too, because that's actually one of my favorites because it's a perfect example of the way a lot of things happen in Washington that get very little coverage outside what I would call the professional accounting press or the professional tax press. And to the average person, they never see these stories. And they're not hidden. I mean, they're there. If some newsman wants to go there and cover that thing, you can tell the story. But anyway, what happened back in the early 2000s is that money was piling up offshore. It has to do with if you're in a multinational company and you earn your money, let's just say in France or Britain, you certainly pay some taxes there, but uh, if you bring it back to the States, if you owe money here, then you pay taxes on that money that's repatriated. That's what they call it. So what did the companies do? They all just started opening bank accounts in places like the Cayman Islands and other offshore destinations and letting the money pile up.
Mhm.
And when it piled up a lot, guess what? They went to Congress and said, gosh, all this money's piling up, and we'd love to bring it back because we'd really like to build more plants and hire more people. And if you could just figure out a way to give us a break on this, to not have to pay the regular corporate rate, we'll bring it back and we'll do some good things with it. And the country will be better off and we'll all be happy.
Mhm.
Well, even though there were some skeptics at the time, Congress bought it. And they passed this thing that it was giving them a tax holiday so they could bring this back at a much, much lower rate. Years later, a Senate committee took a look at this whole process and concluded that not one net job was created by any of the large corporations that had brought money back. And in fact, there had been a net loss in jobs for like the type 5 or 10 of those big corporations over time. So not only did they get this money, which let them do stock buybacks, increase their dividend, uh, and certainly give their poor, downtrodden, starved executives more money. Uh, on top of that, did it create jobs? No. The Senate committee concluded that there was a net loss of these things. So that's what we knew by several years ago. So what happens in the Trump tax bill? They do it again. It's a slightly different formula, and they disguise it in a different kind of way. And don't take my word for it. I'll tell you who studied this. I don't know about you, Brandon, but I don't think of the Federal Reserve Bank of New York as run by a bunch of wild-eyed liberals. Just I don't think it's true. And folks are solid folks who are looking at the numbers.
Mhm.
They concluded when that money came back, it went into stock buybacks,
Yeah.
compensation for executives, did not go into building plants and creating jobs, which was the whole purpose of it. So the reason I'm glad you brought this up, because when you talk about federal taxes, we're talking about this whole mosaic. You're talking about individual income taxes. The lower rates have benefited folks at the top. You're talking about corporate taxes, where the lower rates are benefiting those same people through their dividends and the appreciation of the value of their stock. And you're talking about other things that get plugged into the corporate tax code that further enhance those corporations and let them enrich their stockholders and executives even further. So it's never one thing, but it's a lot of these things that have all added up and added to this picture of, I think it's just disgraceful how the balance has totally shifted now to the folks at the top, to the disadvantage of really everybody else in the country.
Yeah, I completely agree with you. And kind of on the like the other side of the same coin, or so to speak, raising corporate tax rates, obviously not unrealistically, but like, the percents we've seen before, 28, 35%. Has this ever led to like the negative effects that it often gets stigmatized with, like the ones I could think of, like dramatic price increases, layoffs? Because to my knowledge, it actually typically just leads to more like business investments and more things that actually benefit more people.
Well, and when the taxes go up, you have more money in the federal treasury to distribute for projects that are a merit. I mean, look at the Biden Infrastructure Act of just 3 years ago.
Hmm.
I mean, we're building more chip plants in this country. Roads and highways around the country are being modernized. Our infrastructure is being modernized in rural areas, even though rural areas all vote for Republicans, strangely enough. All of this money is going for high-speed internet. I mean, on and on it goes. This is money going to large numbers of people as opposed to the pockets of a handful of people. And that's the concept behind those tax increases. It's to be distributed in effect to the larger body politic.
Mhm.
And what rich people all seem to want, it's like in a way they don't mind paying some taxes, but they want to decide where their excess money is spent. And that goes all the way back to Andrew Carnegie 100 years ago. That's why he gave all this money for these libraries. He despised any kind of tax on income or wealth in that sense,
Mhm.
because he wanted to decide how to give his money. And that philosophy governs really most of the rich people out there today. That's why they have their foundations and why they decide where they want to give their money.
So I did want to briefly just jump back to income taxes because I know you co-authored a book with the now late and I'm sure great Donald Bartlett, which send my condolences for. The book was called The Great American Tax Dodge, and kind of trying to pull from the themes of that book, could you explain some of the ways that wealthy individuals escape paying income tax?
Yes, actually one of the most beneficial ones, and I'll actually show you an updated version of that book if you'd like,
Yeah.
so you can see what it looks like to your listeners and viewers. Um, there are a whole range of things that they can do. Uh, it does start with a lower rate, though. I mean, the rate is important, the fact that that has been lowered. Uh, Another significant benefit that the very rich have is something, and I love the name of this, it's called the angel of death loophole. I mean, if you're the average person and you buy some stock over time, maybe you work for that company, you buy that stock. At a certain point, you probably have to start selling some of that stock to buy another house or whatever it is, help
Mhm.
support your family, send your kid to college. So you sell that stock and you pay whatever the capital gains tax is on that. But if you're a really rich person, you don't have to do that. You can just keep passing that stock on to your children. And this is one of the most unfair things in the tax code. Uh, Let me give an example. Let's just say somebody's wealthy and they have this portfolio of $1 million, and they die, and the stocks are worth $1 million. But their basis of these stocks might have been 300,000. They bought them years ago, but they've gone up in value. If they sell that stock uh, months before they die, they have to pay a capital gain on the increase, which would
Mhm.
be a significant tax bill. But if they pass that on to their children or their wives or other relatives at death, there's no tax on that at all.
Mm.
It's called the angel of death loophole.
Yeah.
Now, isn't that a wonderful thing to have? But who can take advantage of that? Only people who are really super rich, because almost everybody else has to sell their stock from time to time as part of the way they run their lives and finance their various activities.
Mhm.
That's one. I mean, the other great advantage they have right now is, and I was stunned by this when I did the math on this one. As recently, my memory of my own work is correct here.
Mhm.
As recently as about 1990, you
Mhm.
had roughly 27,000 estate tax forms returns filed each year.
Mhm.
Now, the estate tax is never applied to anybody other than people with some money. The average person doesn't have to worry about the federal estate tax. You know what that number is down to right now? Less than 2,000.
Oh, wow.
And in 40 or 50 years, I mean, have we all gone broke? Nobody has any estates? It's the opposite.
Yeah.
So the estate tax has been lowered tremendously as well. This is another vehicle, another way a lot of folks at the top have been able to make more money. So for a whole series of things, we've figured out ways to enrich people at the top. And I can't get over when even Biden's rather modest proposal to raise the top rate from 37 back to 39 on personal income tax. That produced this, oh my goodness, the sky is falling, the economy will crash, and absolutely ridiculous. It would only apply to people at the very top who have already got plenty of money.
Mhm.
Uh, Maybe they wouldn't be able to put an underground sprinkler system in their fourth house or something like that.
They won't be able to get their fifth yacht.
Their fifth yacht. I mean, there's some sacrifice would no doubt be
Yeah.
ordered for this, but none of these things would affect the way those people live. Where to make sure that money gets distributed to the population as a whole in some form or another, that affects the lifestyle of a lot of us.
So what are qualified dividends and how do they kind of play into this sort of ability for the rich to receive like disproportionate breaks that will always benefit them more than maybe those making less?
Obviously, it's access to lawmakers in Congress. One of the most stunning statistics that I did in a recent piece um, was on the issue of lobbying. I mean, I've always kind of known that corporations probably spend more money than, let's say, labor unions,
Yeah.
nonprofits. But it's astonishing. It's like they account for roughly 90% plus of the money spent lobbying in Washington. And the
Wow.
lobbying is not just Congress.
Yeah.
It's regulatory agencies,
Mhm.
IRS, transportation, health and welfare. So it's this, labor unions. I mean, you'll hear these stories of, oh, these powerful labor unions. They spend less than 5% of the total amount of money spent lobbying Congress and the regulatory agency. It is an incredible imbalance that I honestly don't think most people realize it's that severe.
Mhm.
That's one thing. But on the other hand, how do these rich electoral PACs for these big corporations and rich people, how do they spend their money? They give a lot more money to both parties. It's almost even because they need to give a lot of money even to Democrats so that when they can call on them if there's some bill that's going to hurt their interests, that they can get that thing stopped. So on that point, it's more evenly distributed. But on the lobbying, which is the key area, I mean, that's really where a lot of the stuff happens in Washington. It's just not even much of a ball game anymore. It's just so out of whack.
Yes, and that's something I always try to talk about on my channel, where the income inequality goes past just economics. It's political inequality, social inequality. It affects
Exactly.
society in multiple ways.
Exactly. That's exactly right.
And so the question I wanted to end on was, how far do you think that things like higher marginal tax rates, raising the corporate tax rates maybe back to where they have been in the past, eliminating loopholes that you spoke to, like the angel of death loophole, how far could these go, not just in decreasing income inequality to the extent we see today, but even just benefiting everyone, including the wealthy, through things like infrastructure that we all benefit from?
Well, I think the main thing, it would spread the benefits around. I think that's the principal thing. And I've actually talked to a lot of people in some foundations, and some of them say you don't hear them making statements, but they say a lot of wealthy people are very upset by this gap that's developing because they don't really want to be living in locked, gated communities their whole life to worry about crime or things that may affect their standard of living. I mean, they're Americans, and they would like to see a more balanced society out there. And when you look back, one of the most interesting statistics that I came across, and I should show you this, my most recent book, if I could.
Yeah, go ahead.
This one was only about 3 years ago at the time, right at the edge of the pandemic. My timing wasn't so good on that, but the story is the same, and it's an eternal story. But anyway, uh, what we see in this particular kind of thing is that when people, uh, rich people, are just as worried, just as concerned about this as a lot of us who would like to see a more equitable thing. The statistic I was just mentioning a second ago that really surprised me, when you go back in time, you see up until 1980, uh, the percentage increase of incomes for the very wealthy and just about everybody else who was making money was about the same.
Mhm.
I mean, there's always going to be people in the country who are wealthier than others. That's fine. No problem with that. But we're all in this together, and there should be some joint uh, progress if we're going to do that. But from 80 on, that gap starts widening, and that's why we have this situation now.
Mhm.
U.S. has the most income inequality of any developed nation. I mean, I talk to people, friends of mine who I know in countries in Europe, and they can't believe there isn't a national health service. That a poor person here who isn't covered by a health plan can lose his house if he has a big hospital bill. I mean, there's a whole range of things beyond just the taxes that erode that. So the message I've always had in all of these is uh, we need a more balanced society
Mhm.
where we all benefit one way or another. Nobody's going to take away the ability of rich people to make money, but let's pay for your share and uh, and make it a better world.
Completely agree with you. Yeah, and for anyone watching that's interested, I will link the book you showed. I'll link that in the description. The pieces that I looked at to get the questions, I'll link those as well, so people can stay up to date with the things you reporting on and talking about. I do want to thank you, for years, I guess decades, probably at this point of great work and covering things. It was really insightful reading through your different works to kind of pull for these questions. And also, thank you so much for sharing your knowledge with us directly by joining us today.
Well, happy to do it, Brandon. Really great questions on your part, and happy to be with you. Take care
Thank
now.
you. Yeah, yeah. And I hope you enjoy the rest of your day as well.
Will do.